Please join me in welcoming our last panel of the day, who will be taking us through digital asset investment trends, moderated by our very own Steve Torso, CEO and founder of Wholesale Investor, along with our panelists, Lisa Wade, CEO of Digital X, Luke Lombe, founding partner of Faculty Group, Adrian Przelozny, CEO of Independent Reserve, Leeor Groen, Managing Director of Spartan Group, and Henrik Andersson, co-founder and CIO of Apollo Crypto Management.
Good afternoon, everyone. You clearly waited for the best session. I was literally shouting out there saying, if you want to make money from crypto in this next 2 years, this is the session to be in. So it's funny, to me, we purposely did this because I thought this will be the session that helps us keep people around to the end of the actual day. And to me, obviously, I've been a big fan of crypto for a long time. Personal relationships in here so we're just talking about Adrian. The Independent Reserve did their sort of seed round in our boardroom. Henrik's connected to one of my shareholders and one of the directors in my business, Dominic, and that was with banks, so they did their sort of seed round through one of our subscribers. And this has been such a strong area for our subscribers. And I remember in 2018, we held a crypto event, and I remember asking the room at that time who held some crypto, and we were blown away when 70 to 80% of the room put up their hands. So, to me, I know that for a lot of you, you're already sort of owning this area, but there's a couple parts to this. I'm going to start with some of the surface stuff as far as what's happening from a markets, regulation, and so forth. And then after that, I'll go deep. And just note that Leeor may come on during the actual session because this panel session is a bit earlier, and I know he had a 3:30 meeting. So to kick off, I'll give everyone the opportunity to give a bit of an introduction to themselves, their fund, their business, etc. So we'll start with you, Henrik. I know you just did a talk.
Yeah, that's right. So I'm Henrik. Run Apollo Crypto in Melbourne. So we are a crypto asset manager. We've been around for 6 years. We run crypto funds and we advise crypto funds, and we are open to wholesale investors.
Yeah, great. Nice to see you. I'm Lisa Wade. I'm the CEO of Digital X. We're an unusual little company. We're listed on the Australian Stock Exchange and have Bitcoin on our balance sheet. And we also run a couple of businesses. What's relevant here today is we have 3 funds. We have a Bitcoin fund, which is, in fact, the Morningstar #1 performing fund of 2023, which is quite huge. We also have a crypto fund, which is #3 performer in Morningstar. And we have a real-world asset tokenization fund, which is really our innovation play, and we can talk more about that later because the cool thing about that is it's an innovation inside of an innovation because the actual fund is tokenized. And I'll leave it there for now.
I'm Adrian from Independent Reserve. Excuse me.
Do you want some help? I can do the intro for you.
Sorry, did you want me to talk longer?
Independent Reserve is a cryptocurrency exchange which we began back in 2013. So we're one of the oldest cryptocurrency exchanges in APAC. We've now got about 320,000 customers, 80 staff, offices here in Sydney and also over in Singapore. And I guess we're kind of gearing up for a really big year ahead.
I'm looking forward to a big year ahead as well. I think we all are, actually. Hi, everyone. My name's Luke Lombe. I'm a founding partner of Faculty Group, probably best described as a Web3 venture studio. So we're a venture capital firm that invests exclusively in blockchain and Web3. But we're also a market maker doing algorithmic trading for a number of different projects on crypto exchanges. We are a marketing agency. We are an incubator and accelerator. We help to launch tokens. We help to launch projects. We have a development team internally, front end and back end. So we've built and launched our own projects. And an entertainment arm based in Los Angeles. So 8 companies, around 100 people globally.
Brilliant. Now I'm going to start with the boring stuff, but it's very relevant to this sector because it really still is quite new. So what I'd love to get is your sort of perspective on what's happening from a regulatory front, because obviously over the last couple of years we've seen the likes of, there's been some Australian companies that have had issues when it comes to regulation on some of their products, and then likewise you've seen some of the US companies, go through their own sort of, issues with whether it be the SEC and so forth, and likewise, the fights of like the Coinbase and so forth. So as a starting point, what's your sort of perspective on what's happening on the regulatory front? We'll start with you, Henrik. I'll just keep going in order to make it easier.
Yeah, sure. So, it kind of depends a lot kind of in what region we're talking about. In the US, I think there's still a lot of unclarity, or like it's not very clear where crypto falls. So I think SEC is quite clear that Bitcoin is not a security. I think we have to see with regards to Ethereum. We are only clear about one asset in the US after all these years, while in other regions I think Hong Kong seems to be much more open to crypto nowadays. We see a lot of activity in regions like Hong Kong, Singapore, Middle East, and I think here in Australia, I think we are making progress, but it's taking time.
Yeah, I think I'd agree. The answer is very complicated, and I think that the way we approach it, being a listed company, is that we nicknamed it at NAB playing the regulatory advantage and just treating the products as though they are regulated and looking for the regulation that best fits. And all of our funds are regulated, and obviously we're moving into the Bitcoin ETF space because I think that's super interesting, because what you have is a regulated financial instrument that wraps up the Bitcoin so that so it's compliant for retail. And then the interesting thing about setting up products like that is the layers of regulation that are attached to that when it comes to custodian and marketing and all of the different regulations that you have to start thinking about, as opposed to just a wholesale fund. And I think it's a super interesting and exciting time, and obviously the Australian government is watching what's happening globally, and I'm on the board of Blockchain Australia. We did a policy week last week. There's a lot of submissions going in. There's a lot of thought leadership. There's another industry week in a few weeks' time where everybody, it's sort of the buzzword that's everybody's talking about and trying to solve for. So it sounds boring, but I think it's a really interesting time. And none of this is investment advice that we're speaking about now, but obviously looking at the products and working with people that do take regulation seriously, because your money will always be more secure. And with all the excitement going on now, we can't forget about the past, and we have to remember that you really need to do your research and invest in instruments and people and companies that are at least speaking about regulation.
And for you, Lisa, like tokenizing real-world assets, does it make it a bit easier for you? Because you can follow the existing regulatory frameworks with those assets for raising funds?
Yeah, so for that we created a concept called a digital twin. Yep. So we basically take the legal work that exists in the real-world asset and we tokenize that in some form. So really that's what I was talking about as well, just playing that regulatory advantage. What is the current regulation? And then how can I replicate that? And eventually, our dream is digitally originated real-world assets that are compliant, but we need to do the work to prove that they're compliant, rather than just saying, hey, say it's a telephone. I usually have my mobile phone on stage, and I use an example of, are you investing in a photograph of a phone that somebody's telling you is the phone, or is it the actual contract that receives the income that's being collateralized, and it's the validation of that collateral and that income stream that you're investing in? You want to be really sure that that is regulated and that is validated. That's a super interesting space, and just to circle back on that, we just use digital twins and all the assets and mirrors so that everybody knows that they're regulated and safe.
And a quick shout out to Adrian before he answers his question. Like, you were one of the very first people to be, championing and being pro-regulation for this space. And whether you do that because you realise that the more regulation sort of is defined, the more money that comes into it, or just being a good actor in this area, because obviously the trading platforms sort of get in the spotlight during the winter when, let's just say, challenges take place. What's your thoughts on what's happening from an exchange perspective at the moment?
So we've always had the view that for cryptocurrency to ever become a mainstream asset class, regulation has to happen. So we actually applied for an AFSL with ASIC back in 2014, a long time ago, before we've really had a grasp of exactly how an AFSL even worked. We just kind of had an intuition that we're going to be holding people's money, holding people's assets. Obviously, we should be regulated. And this was around the time when Mt. Gox had the incident and they lost people's money. And I remember receiving a call from the person at ASIC that was reviewing our license application, and the question that they asked me was that now that Bitcoin has gone bankrupt, are we going to be withdrawn? Are we still going to be applying for this license? Because obviously this asset class is not going to exist anymore. So that was kind of the level of understanding that ASIC had about cryptocurrency back in 2014. And I'm happy to say that now they've progressed quite a long way, but they're still not quite there yet. They still kind of view cryptocurrencies as this big scary thing that they wish didn't exist, but it does exist, so they have to deal with it. And there's a process in place right now where Treasury released a consultation paper that more or less outlines how an AFSL would work for a cryptocurrency exchange. And from our point of view, it hits most of the nails on the head, and we're very, very hopeful that legislation will be passed before the next election. And I guess the longer we wait, the less likely that is to happen. But if it doesn't happen, then we'll need to wait, another 1 year for a new government to work out what they're doing, which is kind of what happened in the last government that was also pretty close to creating regulation, but then the election happened and they lost it. And then this government began again. So hopefully we're 1 or 2 years away from a framework being in place that governs how an exchange works, how custody works, how assets need to be held on behalf of customers. And hopefully we'll end up in a place where consumers are offered more protection than what they are right now.
Not a lot to add. I think it's pretty well covered by everyone here. But I will say one thing. There's probably 3 things that are blocking the widespread adoption of crypto. One is it's just a terrible user experience. Second thing is it's a very cerebral, high concept thing that's very hard to wrap your head around. And the third thing is the lack of regulation and clarity there as well.
See, I thought you were going to say embedded regulation.
I'm going to add another one to that, and this is around my next question, is that if someone wants to go and buy more than $10,000 worth of crypto direct, or if they want to go and buy 100K, 500K, etc., right now you can do that through CommSec because of the ETFs, but why is it still an issue with banks that they're still, I had a family member recently go to buy crypto, and effectively the next thing she's getting phone calls from the fraud departments of a bank, closed out the bank account, told her that the exchange she's dealing with is a scam, and then likewise told the exchange that they're why is that still happening in the banking system? Because to me, that's got to be one of the biggest blockers for basically the more investment going in and people are holding their own crypto. Do you see any sort of changes coming ahead in dealing with banks?
I'll answer that one. All right. So
by the way, if you can see their faces, like no one wants to come forward answering about banks, just ask them their experiences with them.
Obviously, I used to work at NAB, so I can speak to that. I think actually what I'll say is during Blockchain Australia Week last year, we had a crypto roundtable on scams, which is the whole industry sitting around because there's a difference between scam, fraud, and the crypto industry. And the way we articulated it at the time is crypto is good, scammers are bad. But the reason why the banks were doing what they were doing was because there was a technology platform that's emerged that has measured all of the scams in Australia, and 48% of all transactions that were scams were going through crypto, and then another 15% were tangential to crypto. So that's over 60%. My maths isn't so good today.
Because they can't measure cash.
Yeah, well, no, exactly right. And so that was the data that all of the banks had, that all of the compliance departments then created the fear within the banks that you have to shut this down, and there was a lot of pressure from the top in banks for something to be done. And so there was real data, like you say, it misses cash because, I won't go there. So the banks were literally thinking that they're doing the right thing, but they actually weren't looking in the right place. And then as an industry, we were saying, well, hang on a second, our data doesn't match that. And we had Chainlink there and chain analysis, I should say, and they showed the data that we thought. And then there just really is this sort of approach where they think they're doing good, and they're not really approaching it in the way of thinking about an exchange or the wants and needs of a customer, which is where I want to put my money. The glimmer of hope that I have is that we've been working with a bank through Blockchain Australia, because it's not a Digital X conversation, it's an industry conversation, and developing some technology that can actually sit between exchanges and the banking and have the legitimacy of the transaction validated, so the bank will then automatically allow the money to be moved, which will take away from all of those limits. And I think it's a great Australian innovation. I think it will solve the problem, and again, it'll just mean that we all need to get our act together, working together. So I'm hopeful on it, but there is no doubt people like Adrian, their business is probably hugely impacted by it. I know that we've had some experiences of debanking as a business that we've had to get around, and we always joke about challenges being opportunity, but that one's quite tricky.
So I'll move on to starting off with that stuff, the banking and regulatory part. Moving on to the fun stuff. So obviously, Jan 11th this year was a big day for crypto, where the different ETFs were approved. As I said, from my perspective, as soon as I saw BlackRock had an ETF application in, I assumed that it was going through in this round. For you, what have you noticed has been the big difference since that has taken place? And how do you expect that assists with, from an adoption perspective, but also from a sheer volume of people moving into the space?
Maybe I can get started. So, yeah, we put out a report on Bitcoin ETFs in December this year. I can find it on our website. We, in that report, estimate that we'll see $65 billion worth of inflow into these ETFs. That will be 1% of the total ETF market.
Close. It's nearly at, was it 39 billion now?
We have seen 5 billion in net inflow so far, which is the biggest ETF launch in the history of ETFs. So I think it's been surpassed all expectations so far. The key is that it just makes it so much easier for wealth managers to put Bitcoin into portfolios.
Even everyone here with their CommSec account can literally go into a Bitcoin ETF, which is the CBA is very well known for shutting people out of their bank accounts, but you can easily buy it through CommSec.
Exactly, a very interesting PR exercise for the banks, right? On one hand, they need to sell these ETFs, make money off of the ETFs, and on the other hand, they are debanking crypto companies, so that's interesting. And you're starting to see now some of the biggest wealth advisors and investment companies in the world put Bitcoin as part of a balanced portfolio. Fidelity has now a balanced portfolio that includes a percentage of Bitcoin. And we've never seen that before. And I think this is just the start.
Yeah, I thought you were going to say it was special because we lodged our Bitcoin ETF in Australia. Yeah, obviously we're the minnow.
Give me a chance, Lisa. I was just moving to that at the end. No.
From our point of view, there's no doubt it's a game changer, because what Henrik was saying about the access for retail investors and also wholesale investors, and then the ability for advisors to allow their clients to be advised on crypto, because right now, don't forget, in Australia, it's illegal for an advisor to tell you that you can buy crypto, but it's legal for them to tell you to buy an ETF. So that is a big game changer. And then when you do the maths of what's happening with the balance of the supply and demand, there was a whole lot of excess supply in the system that we call the hangover from things like FTX, and then the consistent demand from the large institutions like BlackRock, Fidelity buying every day is about 12,700 Bitcoin. I just like rounding numbers. So about 785 Bitcoin get mined every day, 12,700, 785. That doesn't add up. There has to be some upside pressure unless there's a hangover. And then you've got the halving coming, which is the number of Bitcoin being mined will halve every day. So you've just got this consistent supply. We nickname it the thundering herd in the market, as you do. Merrill Lynch, BlackRock, beware the thundering herd, and that's what's happening. And then to Henrik's point of people starting to put it as asset allocations in their portfolio. We did a piece on that of what the world would look like if everybody did 5% into their portfolio. And we're working with and launching some research we're doing that we did next week with Mason Stevens on what that looks like in an advised portfolio. And that, from a retailer's point of view, the risk-reward benefits in the portfolio are huge, and it really is that accessibility, because yesterday, if I wanted to action that, I have to become a crypto geek, and then tomorrow, if I want to do it, I can simply buy an ETF through my brokerage account. That's, truly a game changer.
So the other part, what's really interesting for crypto is it really goes through strong bull runs, and then it goes through very dark winters.
Don't talk about the war.
So I want to talk to Adrian about the dark winters because I think it's relevant for everyone to understand a comparison as far as what the crypto winters look like versus the crypto bull runs. So you don't need to give exact numbers or give away anything for you, but from a trading volume perspective, what does winter look like in comparison to a peak bull run when there's just the retail, which has pretty much dominated Bitcoin trading so far, just the retail sort of investors going in? What does that look like on your platform with your 330,000 users?
Yeah, crypto winters really suck. That's kind of like when it's cold and dark outside and we're really questioning all of our decisions and looking at, the P&L and trying to cut costs and, thinking, are we still going to be around next year? But then things tend to turn around and then spring happens and you see some green shoots and you think, oh,
Genius again.
I think we're out of this. Hope the summer comes soon. But we've been through, I think, 3 crypto winters now, so we're kind of used to it. And I guess it's a very cyclical market and it's good to understand that it is very cyclical and then you can prepare for the cycles. So, in the last crypto winter, obviously, we didn't know exactly when it was going to happen, but we kind of had an intuition that it was going to happen, and we kind of had an intuition of how long it would last. And now, even though the retail bull run hasn't really began, we're already preparing for it. We're hiring more people, we're training up more staff, we're moving to a larger office in about 2 months, so we're kind of getting ready to handle that load because when it comes, it's like a tsunami wave of new customers and customer support requests.
Sort of context as to the actual amount of volume in a winter versus an actual...
It can easily be 10, 20x. And, often that's coming from new customers who maybe don't know your platform so well, so they're asking you a lot of questions. It means you need more people on hand to answer these questions. They're all trying to onboard all at once, so you need more people doing KYC. You need to make sure you don't make any mistakes. You still need to make sure that the user experience is good. So it can be a very stressful time. I remember the first time this happened, we were still quite small, like late 2017. I remember sleeping under my desk. I remember answering customer support tickets until 3 a.m. in the morning, doing KYC, trying to hire new people as I'm doing this, knowing I don't have more than 20 minutes to spare to interview this new person that I want to hire. And I'm just hoping they're going to be the right person because I've only got one slot that day because I got to KYC 400 people when I finish that job interview. So obviously it's a lot less hectic now because the exchanges are a lot more mature, a lot larger, but it's still, difficult to work in an environment where you need to be ready to handle 10x the load. And it means you have to over provision during the winters a little bit, and then you got to try and catch up and make sure you're ready for when it really happens, because that's kind of when you make all your revenue for the next 3 years.
Adrian, I think you probably will have a pretty good sense of where in the cycle we are because you deal with a lot of retail clients. So, when you look at your activity, where in the cycle do you think we are right now?
I think we are pretty much exactly where we were at this point before the halving in the last cycle. The retail wave hasn't happened yet, which is interesting because I guess the prices are going up. But if you look at, the amount of people doing a search on Google for Bitcoin, it's still pretty low. It's nowhere near what it was when things were really hot in the last cycle. And, if you look at our user acquisitions right now are maybe double what they were 12 months ago, but they're not 10x what they were. So I think we're still very early in this run and the real wave hasn't come yet.
Okay, next one. So so I'll get into some sort of fun part. And by the way, this is more sort of from a video perspective. So I just want to go, and I will get into the venture side for you, Luke, as well, and also for you, Henrik, because I think, I've always thought crypto venture, I remember, I've followed Henrik for some time, and he basically put out reports on some of the venture opportunities he's going into, and then you see some of the returns of those opportunities, and I think, how on earth did he know? So he was one of my people I've been following. So I'll get into that in a second, but in this cycle, where do you think Bitcoin and Ethereum will land, during this next sort of bull cycle? And you can choose to answer that or not.
A price target? Is that what you're asking?
Price target.
I have to check my crystal ball. It's a little bit dusty. Look, it's anyone's guess. I know different people are speculating on 100, 150,000 or more, which should, I think, be pretty considerable and and a great result, frankly. But it's hard to know. I think Ethereum's what, 3,000. I'm talking about US dollars. Sorry, I always talk in US because we're not actually an Australian company. We're an international global company based in the UAE, and everything's transacted in USD these days anyway. So 150 I think is definitely doable for Bitcoin. I think 5,000 US for Ethereum, absolutely. Beyond that, I don't know. I'd hazard to make a guess there. But to the point that Adrian made before, I think this is definitely the early part of the cycle. And I think the validation that's come from firms like BlackRock, the largest asset manager in the world, with their CEO on sort of the shill trail promoting Bitcoin, I think it's fantastic, and it lays a really strong foundation for what's to come. And I think there's plenty to look forward to. But sort of going back to the volatility question you mentioned before, personally, I kind of enjoy the volatility. I'm not going to lie. I like working my ass off for a year and a half and then not working for a year, or taking a bit of a break. Well, that's not true. We actually build pretty aggressively through the downtimes as well. But I think that's just because it's such an early stage overall, like not just for this bull cycle, but for the whole of the industry. It's only been around since 2009. If you look at the Bitcoin white paper, obviously timestamping goes back prior to that, and blockchain technology goes back prior to that. But it's very early days. It's in its infancy, and so there's a lot of volatility as it's starting to sort of find its feet. But as the retail comes in, as institutions come in, I think we're going to see a leveling out and less volatility moving forward.
If you were to compare the adoption of crypto as opposed to the adoption of the internet, where would you put it at? What year? I know the comparisons in the last cycle was made to, crypto adoption was in the roundabouts of the year 1999, 2000, etc. Where would you put it at now?
Yeah, I'd probably say early 2000s. Yeah.
I was going to go with 1994.
Oh, really? Okay.
So, any price targets for you, Adrian?
No, I do not do that. I've learnt my lesson.
Yeah, we've learnt our lesson too. What we're saying is that previously we would have said that we'll test all-time highs after the halving, or the halvening as the geeks like to call it. And now it seems pretty clear that we'll hit that in a bit of a hurry before then, if you look at momentum indicators. And then I think we'll see 100,000, and then some of the bull cases are quite mind-blowing. But the logic behind them is really sound, and the research is really sound. And so you can't fault an argument saying Bitcoin could be $1 million. Is that going to happen overnight? Absolutely not. However, if I had have said to you 10 years ago that Bitcoin would be, I think it was $56,000 seller when I walked in here, but I think that you would have said I was crazy. So crazier things have happened.
Just ask Adrian, what was the price of Bitcoin in 2013 when you were starting?
It's about $80, I think.
Yeah.
And I was going to joke and say, well, you said ETH will be $5,000. What's it going to do next month? It might be there next week, the way everything is going, because you just start to see this irrational behaviour, and it is still a nascent market, and there's an inverse relationship between volatility and price, and we're still in that hugely volatile space, which means crazy things can happen.
Henrik?
Yeah, impossible to predict, and a lot of uncertainty. In that Bitcoin ETF report we put out in December, we talk about something called the Bitcoin multiple. So the Bitcoin multiple is, if $1 goes into Bitcoin, how much does the market cap of Bitcoin go up? We estimate that multiple to be 50x, meaning if we get the $65 billion in inflow into ETFs, Bitcoin could trade at 200,000. So again, that's kind of the math behind it, but yeah, very uncertain, and no one can make these kind of predictions.
Let's go with that headline of 200,000. No, I'm kidding. So, obviously, I suppose I'll ask this to Henrik and Luke. I think the way you do sort of crypto venture investing, I find really interesting. And, in the last cycle, we obviously saw the rise of DeFi. We saw the rise of NFTs, stable coins, sort of, a lot more sort of stable coins come out. And then also like the play to earn gaming model. Typically, I've found that in each cycle, a new model comes out, a new area comes out, and it tends to attract a lot of capital, a lot of hype, a lot of interest. Sorry, I forgot metaverse for the last one as well. What do you see? Are there some areas that you see starting to rise? And we'll start with you, Luke. Some areas that are starting to rise, for this next cycle?
Yeah, look, I think it's funny you say that there's one mini narrative that occurs within a bull cycle. I'd say there's several narratives that occur pretty fast and sequentially within the cycle. One thing that I find interesting about the blockchain space is I used to live in China. I spent 7 years living in China. Had an absolute ball, and the pace of change in Shanghai and Beijing at that time was incredible. Like, it was just like dog years. 1 year there was like 7 years here. And same thing's happening in crypto right now. That evolutionary path and that growth is just so quick. So within one cycle, we're going to see many different mini trends. Right now, we're in an AI wave. Everyone's like, you see some of the, obviously Nvidia has overtaken Amazon, Alphabet, and we're seeing Sam Altman making pretty big bets for investing multiple trillions into the technology supporting that. We're seeing a lot of inflows into AI, DeepIn, which is decentralized physical infrastructure as well, because obviously that needs to power the brain that's going to control us all one day. And I think being decentralized makes more sense than it being in the hands of one person with Machiavellian intentions.
Google just proved that.
Yeah, we're going to see RWA re-emerge as well. I think it's a really big narrative. Tokenization, I know this is something important for Lisa and myself. We're actually launching an RWA bridge, which is helping to bring crypto money into the real world as well, into private credit. So I think that's going to re-emerge. And I think GameFi is going to have another go as well. The play-to-earn models sort of come off, obviously, and I think there's the way that token economies and I think also the games that were promised last time weren't delivered. There are a few that were delivered and they were very much substandard if you look at them compared to what's actually in the non-crypto space. But there's a lot of AAA games that will be coming out over the course of this year, and I think there's going to be a resurgence towards the end of the year for that as well.
Brilliant. Henry?
Yeah, so at Apollo we invest in the infrastructure underpinning a lot of applications. So more crypto-centric, there's a new narrative called restaking. We are early stage investors in a new protocol called Eigenlayer. We think Eigenlayer could scale Ethereum 100x. That's kind of a huge unlock. That's kind of the type of unlocks that we're looking to invest in at Apollo. When it comes to applications, I think I mentioned some of them before, and Luke did as well, around gaming, around real-world assets, DeepIn, decentralized AI, decentralized social. Those are some of the applications that can be built on this kind of network.
Lisa and Adrian, any comments on some of the... I don't know if you, Adrian, do any venture related, but for you, Lisa?
Yeah, I mean, in the crypto fund, I think Heinrich's just described half our portfolio, but there's so many tangential themes to real-world asset tokenization that we absolutely focus on in the fund.
Real-world asset token just makes so much sense to me. If you think about how much, if anyone's ever set up a fund, the actual cost of setting up funds is absolutely ridiculous. And then likewise, even just the aspect of going into a private company from a capital raise perspective, the administrative costs that are associated with that is also ridiculous.
One of our incubation clients based in Singapore, fully licensed in Singapore, and the Bahamas is offering a fund in a box now. It's almost free. So anyone can set up a venture capital fund for free, fully tokenized and on-chain. So the hurdles are falling away.
I think IX Swap on Wednesday offered to 10 people just a fund in a box. I said, can we be can we be one of those, please? Because I think we've got to
promote Luke's opportunity.
Yeah.
That was us. Oh, happy to set you up.
Thank you. So it's quite mind-blowing. And then those, as an investor, it's no different to looking at equity markets and just looking at those tangential ideas around that infrastructure. And it's, a really interesting, amazing space to look at.
What I love about crypto is that effectively the rise is literally written into the code, right, as far as these bull runs. And it sort of sticks in alignment with it, and there's obviously a lot of analysis done when it goes to it. One of the hard parts, though, crypto is probably the most addictive thing you can be involved in at the same time when it's on, like when it's in a bull market. And you hear a lot of reports about how much money people do lose trading in crypto. So if you were to, not from a specific advice perspective, but from just a general strategy perspective, how do people invest into crypto but really succeed over the long term from your perspective or from what you've seen?
I'm an absolute portfolio geek, and I believe in risk reward, and I don't think you should throw portfolio construction metrics out the window just because you love crypto. And I said this, there are three certainties in life now: death, taxes, and volatility in digital asset markets. And that is probably not going to go away. And so you don't bet the house on it. I say this all of the time because there will be volatility, and I sort of almost hate sitting up here being so bullish because there is just this volatility that is inherent in the industry. It's a nascent space, and that will not go away. But it is fun. So, have a little percentage of your portfolio that you play around with, and then have an even smaller percentage that you do really fun things with, like, you're talking about the eigenlayer and things like that. Like, that is really a fun way to learn about crypto and how to invest. And maybe there's something wrong with me that I think that's fun, but make sure it's just a small part of your portfolio so it is fun.
I can tell you what the VCs and the influencers, the crypto influencers that have made millions and millions of dollars have done because we're literally raising funds from all these guys, and as soon as the token launches, they're getting their initial back straight away. So they're de-risking themselves. So don't let it all ride. If it's going up and you're thinking, yeah, this is great, I'm going to let it go, and then it's going to collapse the next day. As it's going up, DCA, dollar cost average, which means just slowly sell your way out of that. So you're taking that money off the table and you can reinvest that somewhere else.
And that was also illegal.
What is?
The pumping something, the pump and dump. And that's the challenge we face, right? Is that influencers and people do pump small names and then sell into all of us going and buying it. And I guess that goes all the way back to the regulation.
I was going to say, personally, I found it, and I'm going to, give a bit of promo, but personally, I found it really helpful, participating in the Apollo Crypto Fund. I like getting the updates. I find that I would get the Apollo crypto updates and I would share it with my entire team, because going back to what you said, the pump and dump part, like I found it, you can find it very easy to get excited, but you really don't know what's sort of underlying it. So I like someone that actually communicates in pragmatic, simple terms that you can actually understand, but then goes and lets you go and do your own sort of research and exploration. So for me, I found that personally helpful. And then the other one was just a simple comment that Michael Saylor made. And Michael Saylor, for anyone that doesn't know, decided to raise a whole bunch of capital in 2019, was it? 2019 and 2020. And it is a listed company, and he took that money onto the balance sheet for a company called MicroStrategy. And effectively that crypto has obviously done very well. But he had just a simple comment. He said, no one has ever lost money investing in Bitcoin for over 5 years. I was like, that was a really simple philosophy, but obviously it's very easy to get excited. For you, Henrik, what sort of strategy, from a strategy perspective, how do you approach your fund?
Yeah, and by the way, MicroStrategy is one of the largest company in the US now, in top 500, which is quite amazing. So risk management, I think 2 lessons from crypto. Obviously, as the other panelists said, crypto, super volatile. In my opinion, don't need to use leverage. You'll probably lose everything. Second, I think, if you use stop loss, it's really hard in a high volatile market like crypto, so you're probably going to be stopped out at the worst possible time. Rather take a long-term view. I think those are some important lessons. I agree with Lisa. Look at how you construct the overall portfolio. What percentage of your portfolio is crypto? That's kind of the big question.
And then within that crypto space, how you diversify within crypto itself as well.
By the way, Henrik, that's where I got the most value from seeing how Henrik would do it, as far as how much is allocated to Bitcoin, how much is allocated to exchange-related tokens, how much is related to contract-related tokens, etc. I found that super helpful. Just to give you context, Henrik, I've never said that to you in person or before, but I found that really helpful.
An easy way to look at that is just through market cap as well. Like have some Bitcoin, have some Ethereum, have a few of the top 10s or 20s, and then play around with some of the lower stuff if you want better returns and higher risk.
Totally. I mean, our crypto fund that was number 3, literally we were Bitcoin and ETH dominant, and we had a handful of really important infrastructure plays that we thought would be okay, and now we have to rethink that for this year, because it's going to be we call it alt thematics. The little thematics will have those parabolic returns, so we have to step right into the uncomfortable place of risk. But last year was really about the big cap names and really sticking to that Bitcoin and ETH dominance.
So the 2 things I love speaking to fund managers, because I get to hear your investment thesis, and then I love hearing from the exchanges. So this one's for you, Adrian. what are you seeing start to rise, in these early sort of stages from a volume perspective? What are you actually seeing start to, I suppose, what areas are you seeing getting a lot more interest than what you sort of may expected at this stage? Or what do you expect to sort of be the tokens which sort of dominate this cycle?
So I guess ever since the ETFs launched, we've seen a lot of action in Bitcoin. Probably, more so as a percentage of everything else than we've seen for a very long time. So, when we originally launched, there was only Bitcoin, then we added ETH, then we added Litecoin and pretty much all the others. And over time, the Bitcoin volumes became a lower percentage of the overall volumes. There was a time when XRP was by far and away the biggest one on independent reserve. But over the last few weeks, Bitcoin has been number one and Ethereum has been number two. And it's kind of going back to the old days where the big original coins are getting the most attention. I'm not sure if that'll continue through the bull market. Usually if things get, more wild and more hectic, then the smaller coins tend to get a little bit more volatility and then they get more of the volume. But right now, a lot of the attention has been on Bitcoin.
The volume is never going to be with the smaller coins, though, but that's where the gains are made.
I just want to wait for Adrian to put a post on LinkedIn saying it's altcoin season. Then it'll be fun. Then the fun times are on.
We'll be selling into that. No, I'm joking.
We will too, don't worry.
So just a final question, and obviously I really appreciate everyone's time, and we're going to make this video available afterwards. Like obviously AI has dominated a lot of the headlines over the last sort of 12 to sort of 15 months, and the Web3 positioning has quickly made way for Web4 positioning, being crypto with AI. What are some of the use cases that you're seeing coming through, some of the projects that involve both crypto and AI, and what role do you think it will play over this next cycle?
Edge compute. Decentralized compute. So that's decentralized physical infrastructure. So if you think about AI being a brain, that brain can't be held on Amazon, on their cloud providing, because then you have this centralization issue, which in the fullness of time, I think is going to be potentially an issue for us. I won't go so far as to say existential threat, but there's definitely that looming issue with where AI is going. I think to the extent that it's decentralized and that processing power is spread, I think there's a huge opportunity there. There's a number of projects that are playing in that space, and I think it's really exciting to see what they're doing.
Henry?
Yeah, I sort of agree. AI is a centralizing force, and we have seen what that could lead to in the last week or so with Google and Gemini, which has been a disaster.
I'll just clarify. Does anyone know what he's talking about in regards to Google? So Google, people were putting in a lot of prompts into Google, asking it to create images with Gemini, and it had things like the founding fathers of America, being of different colors to what they were and all sorts of controversial stuff. So hence why that's why as a reference.
That's why there's a problem with centralized.
Exactly. So crypto is a decentralized force and is needed in AI as well for that reason.
I totally agree. It's one of our key thematics, just that intersectionality. And then I think there's also a tangential data play of just pure like how you store that data and where it lives. And then as a business, this really interesting concept of, at the moment, the SEOs are really driving flow into like one of the smaller businesses we have called Sell My Shares. And then you're going to see this generative AI flow start to come. And then how do we position as a business for that AI, and how does then that circle all the way back into crypto?
All right. Any final comments on, I suppose, as I asked the last question as far as AI, if there's any other predictions you want to make or any other things that you've got your eye out for, I'll start with you, Adrian. What are you looking for over the next sort of 18 to 24 months?
We're just kind of trying to make sure we can handle the load over the next year. So we're just really strapping ourselves in for a really big year ahead. We pretty much cancelled all annual leave for the whole team.
Sleep is off the table.
Yeah, so we're just madly hiring people right now.
Luke?
Look, I think the fundamentals, if you go back to it, everyone's talking about Bitcoin and price and, it's exciting and the economics of it all. But fundamentally, blockchain technology that underpins this is a paradigm shifting technology. It's like the internet. It's going to change the world. What you think about it or what you understand it to be, That's what's going to happen. It's just in the fullness of time, it needs to get there. And I think the regulatory landscape is important. I think the innovation with a lot of these developers that are ideating ways to disrupt existing incumbent technologies and systems. I think it's really exciting to see that develop through the fullness of time. And so staying true and staying core, you mentioned before that sort of wondering, checking your sanity during the bear market if you're doing the right thing. Is like, I was checking everyone else's sanity. Like, come on, guys, why don't you see what's happening here? This is huge. This is really going to make things very interesting. And so I think if we stay true to that, all of the volatility will even itself out and all the opportunities will emerge, and it's exciting to be a part of it.
Yeah, I definitely agree with that. I'll be speaking to Luke to get my fund on the IX swap. We built during the bear because we're also innovators, and we build, and looking forward to keeping that going. As a fund manager, obviously, we're super excited about the opportunities in, finally having a tailwind. And then I think as a business person and as an Australian, it's how do we remain relevant when there is this tsunami coming of large companies, large fund managers who all of a sudden want to be in our space. And so how, as a business and as a business person, do we remain relevant? And then Australia's got to watch out, because if we get behind in regulation, it's how do we remain relevant as a country? And so that's what I think about.
I just really want to echo that. I think it's really important that Australia speeds up and gets its act together, because I think, and I applaud what Lisa's doing in terms of the consultation process there with Blockchain Australia and Treasury and so on, but we need to get our act into gear. Otherwise, we're going to lose the opportunity.
So my final comment is this. I started the day making a comment that what I love about innovation is the first stage of innovation is to replace the value of the incumbent. And if you go and have a look right now at the value of the NASDAQ, right? The actual value of the NASDAQ exchange itself, its market cap is $32 billion. The value of Coinbase is $39 billion. And the second part to that is then the exponential way of innovation. It then exponentially grows beyond what it actually replaces. So what I love when I have these conversations, and I don't know if like a Henrik would appreciate it or an Adrian would appreciate it, but effectively, you can see the volume that would go through someone like an independent reserve, right? If you think about what independent reserve looks like 5 to 10 years from now, is it getting close to competing with the value of something like the ASX because of that exponential curve with it? If you look at the size of Henrik's fund, where it is now compared to where it was sort of 4 to 5 years ago, his fund growth, his funds under management is exponential and will continue like that as it goes through the next cycle. Likewise, for a lot of the value that's created in the companies that they're involved in. So to me, what makes this super exciting is we're only at the stage now where some of the value, and sorry, I was going to mention about the gold ETF. I did, and maybe I got this stat wrong, but I saw a stat that there's been $37 billion go into the ETFs, across the 11 ETFs at the moment, whereas the money sitting in gold ETFs is at $90 billion. And it's always been referred as the digital gold. So if you think about that from a perspective, it's not even close, it's on the trajectory to replacing the value of the gold ETFs at the moment, and then you will see it go exponentially beyond that. So I look at each of these four, and I look at, said Henrik's been in this space a long time, and I think 5 to 10 years time from now, you'll be thinking about this day and thinking about how that has exponentially grown, and it's very hard for the human brain to understand what exponential growth really looks like. But effectively, all these have actually seen that. Luke, you want to say something?
Oh, I definitely did. They call that, if the Bitcoin ETFs overtake gold, they're calling that a flippening.
Yeah. But that's the first, like I used the example this morning about newspapers, right? As an example, if you think about the classified ads that were previously in newspapers, right? Effectively, what's sitting now in car sales, Seek, REA, and Domain is now 10 times the largest transaction that took place, which was Fairfax to Channel 9. Said innovation replaces the value of the incumbent, and then it goes exponentially beyond that. And that's why I'm super excited for what independent reserve looks like 5 to 10 years from now, and likewise, Henrik's fund, and likewise your different activities.
I mean, I'm not sure if anyone was here for the two presentations prior to this panel. The last one was loyalty, which I think is a really exciting space, and I think blockchain has a really big part to play in that as well in terms of gamification and tokenizing elements of that. And one prior to that was shipping and administration of the bookkeeping, the record keeping. That's another one where blockchain is going to have a really marked impact on as well. I think there's not an industry that exists where blockchain won't have an impact, and I think that goes as far as the Australian dollar, the US dollar, the euro. These will be blockchain digital currencies. They're already piloting these programs and testing, kicking the tires, so to speak. So I think it's interesting to see how blockchain underpins all of this incredible innovation.
Ladies and gentlemen, thank you for joining us for day one of Emergence. Please give the panelists a round of applause.